Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my comments on stock indexes. And I always give you the word of the day. Today is Friday, the 17th. We're right dead in the middle of the month. And the word of the day, it's an obvious word. It's volatility. Okay, we have been moving around. Give you an example. 2 weeks ago, well, actually only last week's high was 1971. Last week's low was 1894. This week's low was 1813. And here we are at 1884. We're up 33 points. Now, we had a bounce yesterday in the afternoon, and we're having a bounce today. But we've dropped almost 200 points in 2 weeks. We've dropped 8% in 3 weeks from the all-time high. We erased all of our gains for the whole year, and we're in October. So volatility has exploded, okay? And the real question you got to ask yourself with this new volatility is, do we buy dips or do we sell rallies? And I'll get involved with that in a minute. Let's take a look at some of the major concepts, okay? Is this correction of 8% and high volatility due to Ebola? Is it due to the Feds? Is it due to China contracting, Japan contracting, Europe going into a recession? What major concept 2 to 3 weeks ago started and turned the market from making all-time new highs, being up 8% on the 5th year of a bull market, and last year we were up 32%, to erasing all the gains for the whole year in 2 to 3 weeks after 9 or 10 months of rally, okay? And that's the real question you got to ask yourself. What has changed? And more important, what has changed yesterday midday and this morning, okay, to change it from a short-term trend down and violently trend down to maybe a bounce? Were we just oversold? After 200 points break, we're now up about 40% of that break that took place last week and this week, okay? So I really don't have a clear answer, except volatility is strong. I would have to say, looking at the charts, that we would need, in my opinion, a close over 1892 today and a follow through on Monday and close above 1900 to confirm that the selling pressure momentum, if you will, is subsided completely. If not, it would go to thinking that you would be trying to sell resistance instead of buying support on your entry level. But that's up to you. Now, as far as I'm concerned, China is about the same as it was 2 months ago. Europe definitely is. Japan is. And the thought that maybe the Fed is going to start QE4 and start another bond buying program to lift the stock market every time the stock market has a correction will never stop QEs, meaning we'll never stop a bond buying or we'll never lift interest rates. So keep that in mind. We'll never get back to a normal market, supply and demand economics. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.